Hi everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account updates and today's market sentiment. Today we're going to be talking about the American venture capital investments that are also hard to raise money, which is showing a decline of economic activity in the US at this moment of time. American Venture Capital Association, which is MVCA, recently released its third quarter report. It shows that both venture capital investments and investments in the U.S. fell sharply, hitting a 6-year low, while the amount of venture capital hit a 3-year low, according to the report. The money raised is also optimistic. The annual fundraising amount is expected to the lowest level since 2017. Annual trend for financing amount and amount of units for finance has been declining. From the perspective of the industry, the hottest industry of the past 2 years are also not optimistic. Mobile technology raised just $6.5 billion in the first 3 quarters this year, and is expected to hit a 6-year low for the full year. Mobile technology financing amount and quantity trend. Electric car industry was the biggest winner this year. It raised $1.838 billion for the first 3 quarters and $530 million for the autonomous driving industry. According to the report, the fundraising will be raised at large investment institutions, but in the first 3 quarters of 2023, 2/3 of total raised was medium-sized funds concentrated between $100 million and $1 billion. But this year has been difficult for new entrants of the industry. 3/4 of the total funds raised are raised by old funds. The report believes that the primary market is still under great pressure, but the new policies will ease the industry's difficulties, such as the Inflation Reduction Act, the CHIP Act, the upcoming Science Act. A significant number of industries have benefited from the new policies, such as artificial intelligence and life sciences. More investment in these industries mean greater value in the future. In terms of fund raised, the total of $42.7 billion with 344 new funds is expected to be the lowest since 2017, while the number of new funds will be the lowest since 2014. The report says there are several reasons for the decrease. First of all, the IPO initial public offering returns are not ideal, resulting in low return for the fund GP to investors, and the LP is no longer willing to invest money in that fund. Secondly, large investment institutions are increasingly cautious about investing in venture capital industries. In addition, GP people are increasingly looking for overseas, with the Mid-Eastern becoming the target of many American GP companies. In terms of IPOs, the largest IPO supported by venture capital in the third quarter was Instacart, grocery distribution platform and marketing SaaS company Klaviyo, which raised about $1.2 billion. According to the report, the current market valuation of the unlisted companies is at a low level, which also greatly affects the motivation of companies to go public. In the first 3 quarters of this year, a total of 123 U.S. companies went public, raising about $19.731 billion. The number of the money raised fell 27.2%, lower from 169 in the same period last year, but raised just over 0.2% higher from $19.692 billion in the same period last year. It should be noted that in the first 3 quarters last year, 72 IPOs were SPAC, Special Purpose Acquisition Companies, IPOs, raising $10.954 billion. The number and scale accounting for 43.79% and 55.63% of the same period last year, respectively. In the same period this year, SPAC acquisition Special Purpose Acquisition Companies IPO was 22, raising $2.542 billion, accounted for 17.89% and 12.88%, respectively. That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.